You're watching The China Show, coming to you live from the Capital Markets Forum in Hong Kong. I'm Yvonne Man.
Yeah, pleasure to have you all join us today. I'm David Ingles. We're counting down to the open of market opens in Hong Kong, in mainland China. Our top stories today, we're looking at fixed income in particular. As you can see, yields on the way up, continuing to come under pressure following a sell-off in treasuries. You have a hawkish BOJ in the minutes there, showing a June meeting, or the June meeting, is live for a potential hike here. Investors also looking ahead to Chinese trade numbers coming through for more clues in the strength of this economic recovery. Now, Chinese President Xi Jinping lands in Hungary, touting ties with Eastern Europe as a boon for China's economy, ends a Bloomberg scoop. Nomura said to limit exposure to hedge fund giant Segantii following a similar move out of JPMorgan.
All right, it's the inaugural Capital Markets Forum. We're live here at the Hong Kong Exchange. And yeah, we talked about it's the first event of its kind, co-hosted by the Hong Kong Exchange as well as the Saudi Tadawul Group. And really the theme, Dave, powering connections, right? We've seen a really clear warming of ties between China and Saudis in the Middle East of late as well. And this event certainly solidifies that and what sort of business opportunities are going to be. Hong Kong certainly needs it, given just we've been looking and experiencing a 2-year sort of depressed IPO market. So we definitely need those new listings. And for the Saudis and for the Saudi businesses that are here this week, they certainly want more exposure to an Asian investor base, Dave. So certainly there's a lot on tap here today.
Well, there's a lot of, you're right, there's a lot both sides can offer each other at this point in time, certainly given flows and assets and certainly some of the sort of wealth objectives that we have here in Hong Kong. Not to mention as well maybe exposure to these markets if this rally, this world-beating rally still, that's actually paused a little bit right now this week, continues in the Greater China region. Speaking of really equity markets trading sideways, not a lot of action across equity markets with the exception, of course, of Japan. It's really in, and as you can see, the fixed income space here with this melt up in yields you're seeing. And in Japan, we're now at 0.92% on the 10-year yield, and certainly conversations on those BOJ minutes. And we'll get to the yen in just a moment here, that maybe June is live for another move out of the Bank of Japan. That being said, we've certainly heard a sort of notching up in the rhetoric as it pertains to intervention. The ready anytime was the latest comment coming through today. Flip the boards. We're busy on the data front. We talked about this. You have trade numbers out of China. You have a Bank of England rate decision. You have a rate decision, by the way, coming out of Malaysia as well. Golden Dragon Index overnight, 0.7 to 1%. So we're looking at some support levels as this market, this rally consolidates even further. A50 futures coming in line over in Singapore. The CGBs and the CNH, of course, very much in focus as well, given the sort of comeback in the US dollar. CGBs at 2.3%. You're looking at some of the futures as well coming online as well. In terms of earning, it's quiet this part of the world, so I think SMIC is coming out later today. Manulife, listed here in Hong Kong, came out earlier on. We'll look at market reaction there. In terms of sector groups, I'll just make this very quick. Lithium battery makers in focus. You have some of the car makers because of the trade numbers which came out yesterday on the sector. And Yvonne, of course, we're looking ahead to the trade numbers coming out of Hong Kong as next clues or next catalysts for this rally. In the meantime, though, of course, Yvonne, back to you. You have a very special guest, of course, joining us now exclusively.
Yeah, we talk about the Hong Kong Exchange and really their latest strategy here, really trying to lure more of that Saudi money here into the city at a time when we're starting to see some investors in the U.S. and Europe maybe shy away from Hong Kong the last few years, just given COVID as well as the geopolitical tensions out there. I'm pleased to bring in Bonnie Chan, the new CEO of Hong Kong Exchange. She just joined and took that job, I believe, back in March, and now she's here with us. Yes. Bonnie, it's great to have you here this morning.
Thank you, Yvonne.
You're coming to in the top job at a very critical time when this IPO market we talked about has been quite depressed for the last 2 years, but there's still some signs of hope. Stock market turnover, this bull market that we're seeing coming back here. Seems like Hong Kong is gaining a bit of mojo right now. Can you tell us what your priorities are going to be?
Yes, absolutely. So today is actually, I'm in my 11th week as the CEO of HKEX. Very proud to be taking this role. I issued actually a blog a few weeks ago, and I give it a title, Redefining Resilience. I think as you know, there are so many changes happening around us. I call them the four changing global orders, right? Geopolitically, as you alluded to, we are also seeing a lot of different ways people are raising capital, so capital formation is changing. On the technology front, obviously, we're seeing a lot of exciting technology coming to disrupt, the old ways that we're doing things. And last but not the least, just the way financial markets are arranging themselves are very different from at least, the time when I started my career. So amidst all this, I think what we want to focus on at HKEX is really, first of all, to play to our China strength, really build on it. I think that's our trump card, definitely. And then surrounding it, really three strategic imperatives that we are very focused on. The first one being our efforts to continue building the market vibrancy and to create that network effect. What that entails is really to bring more issuers, more investors, and more products into the ecosystem.
You mentioned about that. What your predecessor, Nicholas Augustin, talked about this great IPO pipeline that was coming.
Yes.
When do you think this will finally materialize?
Yeah, I think, well, first of all, as you probably know, only a few weeks ago on the 19th of April, the CSRC issued 5 measures which will provide a lot of support to our capital markets, 3 of which are very closely related to the Stock Connect, including a relaxation of the ETF eligibility standards, inclusion of REITs into the Connect franchise, as well as the southbound RMB counter inclusion into the Stock Connect. Also, there is a very exciting one, which is the 5th one, which is to bring high quality, right, top-notch companies from the mainland to come and list in our market. I think all that is creating a lot of excitement. And I will share with you that actually since the announcement of those 5 measures, we have received so many calls, you wouldn't believe, from potential issuers really wanting to explore doing an IPO in our market. So that's going to add onto the already quite robust pipeline.
Okay.
Now, in terms of when
any IPOs been lined up since those measures come through?
Well, we have the 100 companies or applicants in the pipeline already, and I think with the latest measure and really that excitement and a lot of proactiveness in terms of reaching out to us, I can really only see that building up. So for us, obviously we need the market conditions to also be a lot more conducive to getting the IPOs done, but I think what we've seen lately, especially the last 2 weeks of April, is giving us a lot of hope.
Yeah. When they mention the Beijing that they will support leading industry names, what is your interpretation of that? Are we going to get these blockbuster names coming back here in the city?
So my interpretation, first of all, in terms of sector, what we can do really to complement the domestic exchanges in the mainland is to focus on the new economy. That's what we have done very well since 2018. And as you know, we have issued a new chapter in our listing rules, Chapter 18C, which focused on what we call specialist technology. And these are really the sectors I think investors are most interested in at this juncture, including things like artificial intelligence, new energy, new materials, quantum computing. And so while I really want to sort of see more names coming, and I don't know whether they are only confined to this space, I have a feeling that a lot of them will be in the specialist technology space.
Okay. Does that include the likes of Ant Financial, Didi? I mean, these are names I know everyone that's watching right now.
I'm not able to share specific names.
Right.
I truly believe that given how much growth we're still seeing coming out from the mainland, this is going to really give us a very interesting batch of new IPOs.
What's that risk, though, of still some of these Chinese companies bypassing Hong Kong and just listing domestically?
Yeah, I think we need to really think about our strength as a capital raising platform. We have, of course, over time demonstrated our ability to support mega IPOs, right? Tens and 20, 30 plus billion US dollars have been raised successfully in our market. So. And our trump card is really the Connect franchise, right? We have to remember that HKEX is the only platform which, if you get a listing, on our exchange, you have access not only to international money, right? Yeah. You also have that unique opportunity to tap into the very vast number of investors on the mainland through our Connect franchise, right? So that's our USP. That's our unique selling point.
You mentioned 20, 30 billion, these sort of old capital raising targets or numbers that you've had. I mean, it seems like we're far off that now. Yeah. I mean, 2023 was the worst in 20 years. This quarter alone, we've only seen less than $1 billion capital raised.
Right.
So how confident are you that we're going to get back to those glory days?
Okay, so I think the fact that the fundraising which took place last year, if for example, was not as high at as high a level, I think is a reflection of really the macro conditions, as well as the fact that interest rate environment it's not particularly conducive.
Out of your control.
Yeah. And if you're a business owner, right, and you see the valuation, you always feel that you can fetch a higher valuation for your company. So I don't think that's a structural problem. I really think that that's just a reflection of market conditions. And when things get better and interest rates should come down, I really think that we will be seeing a lot bigger IPOs coming back into our market.
Apart from IPOs, dual listings of A shares. How big of an opportunity is that for Hong Kong Exchange as well? We just learned that Medea is also refiling its application here in Hong Kong.
Yes. So on the 12th of April, the State Council also issued what is called the New 9 measures, which is very focused on improving the Asia market. And if you read it, there are a few measures talking about raising the eligibility requirements, accelerating delisting on the Asia market, etc. So I think it's a good thing that they are continuously making improvement to the Asia market, but at the same time, the fundraising needs of a lot of these companies which are listed on the Asia market, is still very real, right? So I think what I see is really a big set of opportunities for us in Hong Kong to provide that alternative fundraising channel for these companies which are continuing the development of the business. So hopefully we're going to also see a pickup of these Asia listed company exploring an H-share listing, which will add to their fundraising capabilities.
Hong Kong Exchange has also vowed to bring in more international sort of names here, but lately we've heard the likes of L'Occitane, Samsonite may have plans to delist it. There seems to be a perception out there, Bonnie, that Hong Kong no longer is that destination for liquidity. How do you at least reverse that sort of...
Okay. So first of all, in terms of the privatization activities that we've seen, it's I think quite common to see, when the valuations are at a lower level. But that's again not a structural problem. It's just sort of how companies choose to manage their capital raising and all that. Now, I would say that the liquidity is definitely something that we are very focused in terms of working on. And I also am very hopeful because, well, going back to my point about the volume, that we've seen in the last 2 weeks of April, right? It doesn't take a lot. It can come back very quickly. So I think, looking at our fundamentals, I don't think we've changed. We are still a very compelling location for capital to meet opportunities, right, for investors to deploy their capital, and also for international company. I go back to this point about the possibility of stock connect inclusion. This is unique, right? So I guess, as the Chinese economy continue to recover and get stronger, as mainland investors continue to want to diversify ways that they invest their capital, their money, the opportunities for international companies seeking to fundraise in Hong Kong is immense.
I want to talk a little bit more about, obviously, the Saudi event and what you're doing here this today as well. I mean, obviously, what is the international strategy right now? I mean, your predecessor also was all about opening offices abroad. What's your move going to be?
Okay, so why don't we focus on this event, which we were very excited about. So last February, we signed an MOU with Saudi Tata World Group. And after that, we've done a few things. We have recognized Saudi as a recognized stock exchange, meaning that companies listed on the exchange can come to Hong Kong Kong for a secondary listing. We've also now listed the first Saudi ETF, which is the biggest ever in the world and the first in Asia. And we also held FII priority last December. Now, this very exciting CMF. Apparently, 1,000 people have signed up. We have only seats for 500, and they will be filled very quickly. There will also be 300 plus bilateral meetings. And these bilateral meetings will be participated also the corporates and investors from Hong Kong and the mainland. So what we're doing is matchmaking, which I think it's a really good step to foster relationship, powering connections, which is the theme of this event. But more importantly, with those connections being forged, it's just a matter of time that we're going to see both Saudi companies listing on our exchange and vice versa.
Saudi Aramco certainly is the one that everyone wants to talk about. That's all the buzz, the second listing where they're going to be listing. What are conversations like now? Can you give us any sort of good news? And what can Hong Kong Exchange do next?
Okay. I think all I can tell you is that the dialogue is very alive, not only for specific names, but really generally. And like I said earlier, right, this is the occasion where we continue to matchmake, continue to power connections, and
so you see other Gulf companies listing here as well. Is that a potential?
Well, that's definitely the objective of building this relationship, right? It will take time, right? But again, with an event like this, and with so many parties participating, both on the investor side as well as the corporate side, I'm really hopeful that it's just a matter of time that we're going to see, our efforts bear fruits.
Bonnie, it's great to have you. Thank you so much for joining us on the China Show. Bonnie Chan there, the CEO of Hong Kong Exchange. Dave, I'll send it back to you.
Yep, matchmaking, and hopefully we see them swipe east, as they say. Right, heading north. Futures pointing up. We're up a couple of 80 points right now in the Hang Seng Futures Index. We are approaching that open, certainly with some tailwinds coming through here, 13 minutes away. Coming up here and shows that, in fact, at the Capital Markets Forum with Yvonne there at Hong Kong Exchanges. Joining us exclusively is CSO Asset Management, the CEO, Ding Chen. We're talking all things ETFs, and of course, particularly, we'll have a closer look at this ETF, the Saudi ETF, and investment opportunities there, bridging these two regions here. Counting down to the open of trade, just under 13 minutes away, the Thursday opening bell in Shanghai, in Shenzhen, and here in Hong Kong. You're watching The China Show. Good morning. Welcome back to shows. Just a brief look at the agenda as we head into, well, the greater part of Thursday, as you will. There we go, a couple of minutes to the opening bell. Data in the form of trade numbers coming through for April, possibly credit data coming through. We are in the window for that. More in the third bit in a moment, of course. Third stop there for the Chinese president. Interesting developments out of Country Garden, and perhaps the first major test, if you will, of some of the guarantees on stake-backed bonds. We'll talk more about that, but effectively, Country Garden is said to be asking those guarantors to pay the interest to some of those bonds, and more in the markets in a moment there. Now, on this trip in Europe, Chinese President Xi Jinping has arrived in Hungary for the last stop on his European visit, where he is expected to sign more than a dozen agreements with the Beijing-friendly government. Now, on that note, I should also mention here that with Serbia, the Chinese, this announcement just dropping here, that they've signed, the two countries have signed this agreement to cooperate on e-commerce. Stephen Engel, our Chief North Asia correspondent, is here with us to talk us through that. Let's talk about Hungary, because he's there now. Yeah. It's a very Beijing-friendly government. So is this, our expectations quite high as far as where we get these commercial ties coming? Yeah, I think we'll get commercial agreements. We're already getting some headlines coming in late yesterday that Hungary's economy minister hold talks with China about the EV maker NIO. That's an interesting line. Also, they agreed to cooperate on nuclear energy. The reason I mentioned about NIO is being interesting because BYD also in December, the biggest EV maker in China, announced that it was building a factory, the first one that BYD has
in Europe, in Hungary. We also are expecting perhaps a Great Wall Motor announcement to build an even bigger factory in Hungary. We already know that CATL, the biggest battery maker, also has a plant that is being built in eastern Hungary. Why Hungary? Well, Viktor Orban's government is very friendly to China and is, basically has its arms wide open to Chinese investment. But he's also, rankled some other EU member states who are a little bit annoyed at the overcapacity issues that have been levied at China, but also China's support of Moscow at this time of a security threat with the war in Ukraine. And Viktor Orban's government has been both warm to China and warm to Russia. So Hungary, a bit of an outlier, along with Serbia as well, and the government of Alexander Vucic, where obviously Xi Jinping just went there, and there was some brotherly love there between Xi and Vucic as well, over the 25th anniversary of the U.S. NATO bombing of the Chinese embassy in Belgrade 25 years ago. So, yes, this is very strategic for Xi to go to Serbia and Hungary. He gets a friendly relationship.
Yeah, and you mentioned perhaps some of the EV capacity and production capacity that might get moved into that part of the world, and perhaps one of the steps that could address some of these overcapacity conversations taking place that's still come up quite consistently, of course, while this trip is taking place. What can the president do about that?
Well, definitely the issues of protectionism and overcapacity have been raised by Ursula von der Leyen, the EC president. It's been raised by Olaf Scholz of Germany, as he has to protect as well his legacy automakers, Mercedes, BMW, Volkswagen, obviously. And there's serious concerns being voiced by those European leaders. But what Xi Jinping sees is an opportunity in those markets that are friendly to China. When the EC in Brussels is talking about potential tariffs of upwards of 20% because of the 30% premium that legacy automakers in Europe, it costs for those EVs, the Chinese are potentially going to dump in that market and essentially benefit from subsidies. China has discounted those claims, and those private companies are not getting subsidies. But again, Hungary, if they build those plants, build them in Europe, they are European built, but it's a longer-term strategy.
Steve, thank you so much. Stephen Engel, Chief North Asia Correspondent. A preview of the trading day just ahead. This is Bloomberg. Right, futures are pointing to a flat open. This is really the case across most parts of the Asia-Pacific, with the exception of Japan, I should note. And that's really where you're getting a lot more sort of cross-asset price action moves across sort of a more hawkish note. More on that in a moment. But the opening bell here in Hong Kong and up in mainland China, 3 minutes away. You're watching The China Show. Good morning. Good morning, and thanks for joining us. You're watching The China Show. We're set for the opening bell, 40 seconds away. We're trading sideways across most of the Asia-Pacific, not just here in Hong Kong, where the rally has, I guess in some ways, not really hit a wall, but, we've seen a period of consolidation these last few days or so. Volumes have come down a little bit. Volumes did pick up, of course. Turnover has been picking up in mainland China. We've been looking at, I think, almost 4 days of about 1 trillion RMB in turnover. In terms of data coming through today, trade numbers, we'll be watching that closely. Possibly we are in the window for credit numbers as well to come through. We'll keep an eye on that, although there's no indication it should be out imminently as well. Now, away from these markets, just very briefly, while you look at the opening bell, Japan is the market to watch today. You're getting really, I guess, in terms of tone, a lot firmer language coming through out of the Japanese officials. More on that in a moment. As you can see, the lack of strength coming through across these markets. So you're looking at the CSI 300, Hang Seng, and MSCI China on your screens right there. SMIC out with earnings today. Keep an eye on that. Trade numbers, we talked about this. Hong Kong, flip the boards, please. Or is this Hong Kong already? Yeah, part of it is Hong Kong. Well, a little bit more in Hong Kong. There we go. Some of the big movers, bottom of your screen, some of the big constituents, TSMC, Tencent, HSBC, Baba, AIA, Meituan, and China Construction Bank. We're opening after a 2-day slide. 18.4 right now is the Hang Seng Index. Very quickly, some of the big winners yesterday, China Coal Energy to be more specific, and Shanxi Coal coming up on your screens. And also some news coming through here on some of these lithium battery providers and guidance from officials here that maybe we could see some of these guys companies cutting some of these projects, might go into a broader conversation around, things like solar, lithium, and EVs, right? Those are the sort of three pillars as it pertains to maybe where you're getting overcapacity, margin compression. That's a longer conversation for later. Right, car makers, you had some data coming through yesterday out of the PCA. So month to month, so March to April, I think it was 6%. The year-on-year figure kind of dropped comparing March to April, to be more specific. Great Wall Motor, there you go, bottom of your screens, and XPeng is 3.6%. Right, how far has the rally come, in case you didn't notice? 15 to 30% higher, depending on which benchmark you're looking at. So HS Tech is up about 30% still. You have the larger benchmarks on the mainland. You have the CSI 300 and Shanghai Composite about 15% from those sort of late January, early Feb lows. Now, on this note, Morgan Stanley, in fact, just dropped this note in our inboxes, I think yesterday, warning against chasing the stock gains on an index level. Laura Wang, the author of that report, joins us here on set, quite timely, Chief China Equity Strategist. That's the headline. Don't chase it on an index level. What specific indicators are telling you why not?
Yes, so of course there has been a lot of improvement in the market condition in China, particularly since the beginning of February. And we've been highlighting a lot of those to our investors. For example, macro stabilization. For example, Morgan Stanley Research actually upgraded our GDP forecast for this year from 4.2 to 4.8% earlier to last month. And we have been highlighting to investors that the global loan-only funds had actually cut their exposure to China to an extremely low level, and from there onwards we think the outflow pressure would actually decrease quite significantly, and a lot of these improvement happened around the end of January and beginning of February. But we have to notice that actually a lot of the recent momentum pickup actually happened around middle of April. And that was coincided with a lot of external development, some anticipation of further geopolitical tension escalation, and then there was the anticipation of a higher yield for longer going into the FOMC meeting last week. And then there was also the sudden spike of Japanese yen depreciation. And a lot of these factors actually, we think, triggered global investors to be motivated to diversify away from the US market, the Japan market, which were the two most popular markets year to date. And China apparently fit into the picture very nicely, given its very low correlation with the rest of the world. But at this point, I think, if you look at valuation of China, and we use MSCI China as an example, the valuation is now at 10 times forward PE, which is already 15 to 20% higher versus where we saw it over the last 6 to 12 months. Which means we think at this point a lot of that sentiment improvement, fundamental improvement, positioning improvement has been largely priced in. And we're also seeing a lot of overbought signals. If you look at Hang Seng Index, it's already trading at 13% above its 100-day moving average. And usually, historically, if it starts to trade above 10% at that level, you will see mean reversion activities in the market. So this is why we say at the index level, probably you don't want to chase further at this point. But I think the overall market dynamics have improved a lot for investors to focus on single stock ideas and thematic investing.
Yeah, so at least we've turned a page on that.
Yes.
Certainly in terms of sentiment. You've opened up a lot of doors there. Let's talk about some of the cyclical trades, for example, and some of the tactical, for example. Quant funds have come in, overbought, of course. That's the short-term money. Where do you expect flows as far as some of the quant funds are concerned, short-term?
Yes, so we actually saw a lot of momentum trend following quant funds coming into the market over the last month or so. And from here onwards, given that we're expecting mean reversion activities happening in the market, those trend following quant strategy are likely to also follow that trend and potentially actually choose to exit market, at least on an interim basis.
Right. Long-only funds, that's the money that's sat in the sidelines. That's the money we're waiting for. Is there a correlation between how volatile this market is, actual vol, for example? Because I would imagine if that remains at a premium to what you're seeing elsewhere, mutual funds will stay away.
That's right.
And I'm wondering how you're looking at that dynamic moving
Exactly.
forward.
Again, towards the end of January, beginning of February, China's realized volatility is twice as high as the rest of the world, which means quant funds had to cut their short positions, and the longlies also need to manage their exposure in terms of the underweight position to China versus the benchmark a lot more carefully. At this point, what we saw that has been happening over the last 2 months is that global longlies actually have reduced their underweight position to China quite significantly.
Oh, okay.
Yes. So I think they have apparently expressed their perception and their interpretation about the investability of China through these underweight position management. This is why we say at this point, I think the longlies, the more sticky, fundamental focused investment strategies will have more capacity and I think attention span to focus on the leaders versus the laggards, the winners versus the losers. And this is a very good environment if you actually pay attention to fundamentals and pay attention to investment themes that are likely to outperform the market. I think last time I was here, we talked about the SOE reform beneficiaries. And that theme, at least the group of stocks that we recommended to investors, even during the last 2 months of major beta rally, they actually had performed on par with the overall market, which I think is quite significant. And we also think China going global as a theme is going to be here to stay, because those are the companies that are, number one, positioned quite nicely in the current sort of slowing down environment domestically, but they are also taking a lot of initiatives to try to expand their footprint in overseas market. And this gives them extra room for top line and bottom line growth. And investors are extremely interested in these thematic ideas and single stock ideas.
Yeah, and some of the signposts you're looking at, you've outlined that, what happens outside and the attractiveness of other markets is one. The other thing is, you mentioned valuations, which I want to get into. At a critical juncture, and next week is arguably the most important week for earnings, arguably for this market this year. How are you looking at earnings right now?
Yes, so the Asia market has already wrapped up their first quarter earnings season. All of the Asia companies have already reported. So what we saw is, in terms of number of companies, close to 30% of the Asia companies still missed the market expectation.
Okay.
But magnitude-wise, that 30% miss is smaller versus the previous quarter, which is the fourth quarter of last year. Then we had close to 40% of Asia companies miss the estimates. So to your point, it's extremely important to monitor how the offshore listed Chinese companies, particularly the large cap names, are going to report over the next couple of weeks. It will be interesting to see if they can actually continue the trend of showing a smaller magnitude of miss and actually a bigger magnitude of potential earnings beats. And this, I think, will help investors rebuild further the confidence in the macro rate stabilization as well as the potential earnings bottoming out.
Is it too early to not conclude, but assume that the earnings stories turned the corner? Because we're coming off, if I'm not mistaken, the fourth quarter of last year was probably the worst set of earnings we've seen in recent years. Have we turned the corner? Have we seen projections start to come up?
Well, as I said, if the offshore listed companies can continue what we saw with the Asia market, that's going to be the first quarter of things getting less bad. But we would at least to see another quarter of things getting less bad to be more convinced about that sort of bottoming out trend. Of course, there are other signposts we're monitoring as well.
Right, which is in your full report. Laura, a pleasure to have you on the show. Of course, Laura Wang there, Chief China Equity Strategist at Morgan Stanley. Don't chase the index at this point in time. It's time to pick those stocks. Right, just pivoting away from Chinese markets very, very briefly here. Japan is, we're focused in on that market too. Nikkei and the banks, and as you can see, this is really moving against the grain in the Asia Pacific. And at 92 above zero on the 10-year, that's now very close, about 4 basis points from the high of last year. Based on the minutes which came through, and by the way, based on the commentary coming through out of Japanese officials in the last, I would say, 10 minutes or so, it's looking like they're firming up as far as the conversations around interventions concerned. And might June be a live one for the BOJ to deliver that next blow in terms of rate hikes? We'll see. 155.52 on dollar yen. Plenty more ahead. This is Bloomberg. Good morning.
the 100 companies or applicants in the pipeline already. And I think with the latest measure and really that excitement and a lot of proactiveness in terms of reaching out to us, I can really only see that building up. So for us, obviously we need the market conditions to also be a lot more conducive to getting the IPOs done. But I think what we've seen lately, especially the last 2 weeks of April, is giving us a lot of hope.
That was Bonnie Chan, the Hong Kong Exchange CEO, speaking to us a little bit earlier on. We're still live here at the Capital Markets Forum here in Hong Kong. They're about to start the ceremony, so it's about to get a bit loud here, Dave. But certainly what you heard from Bonnie Chan herself was this optimism that what we heard from the CSRC last month really gave her a bit of excitement of what's to come as she takes the helm as CEO, that potentially we could see some of these mega deals, big names, come back to list here in the city. And we're talking a little more about the prospects between Hong Kong as well as the Saudi. The Saudi exchange CEOs will be joining us at the 10 o'clock hour. Tell us how their IPO pipeline is doing. Their market cap has actually been going from strength to strength. I think they climbed about 11% over the past 3 years as well. So maybe any potential for some sort of cross listings here, and maybe a little more detail what the Saudi Aramco second listing. When are we going to hear any more news on that? On that note, let's get more on this latest now, a scoop. Nomura is said to be joining JPMorgan and limiting its exposure to Simon Sadler's Segantii Capital Management as the hedge fund faces insider trading allegations in the city. For more, let's bring in Lulu Chen, who leads our Asia investing coverage. And Lulu, just tell us, yesterday we heard from JPMorgan, or at least your sources telling you, what have we learned on prime broker reaction to these Segantii charges so far?
Well, Yvonne, our colleagues have been told that JPMorgan won't engage with Segantii on new block trades and initial public offerings globally, and the bank will refrain from activities such as adding new positions with the hedge fund or providing it with more financing. They're not alone in doing this. We've been told that Nomura also won't be adding more leverage or new positions to its dealings with the hedge fund for the moment. Segantii has 9 prime brokers, so it really is a train of reaction, and we're waiting to see more fallout from the SFC investigation.
Lulu, just quickly, how big of an influence does Segantii have? Just put this into context for us, size and scope and scale.
Yeah, Segantii has long been a prized client of Wall Street banks, and they often are one of the go-to hedge funds if the banks need to unload large chunks of shares known as block trades or stock offerings. They had an AUM of nearly $5 billion as of March, really played an outside influence in the market here in Asia.
Lulu, thank you. Lulu Chen there on this latest Bloomberg scoop here in Nomura after JPMorgan's move. Let's get to some of the big corporate stories that we're tracking at this point in time. Country Garden, this is a big one to watch today. Deadline, of course, is said to be seeking help from a state-backed program to pay its interest. It's actually due today. And the sources say it's in talks with China Bond Insurance Company over the 2 notes with coupon payments worth more than $9 million. Now, it's the first major test of a program, if you remember, introduced back in 2022 to help developers issue debt and, of course, them addressing some of those problems with liquidity. Official Chinese data suggests here, we're talking Apple here, iPhone sales there jumped about 12% in March. It's an early sign of success in errors, at least to turn around a decline here after Apple and its retailers cut prices. The tech giant last week surprised investors by reporting quarterly revenue from China that actually beat expectations. Now, more on Apple. Certainly the company is also the subject of our big take today. Now, Tim Cook has been running the company, for 13 years, but there's been little public discussion of who may replace him. Let's bring in Mark Gurman, our tech reporter, has been looking at the runners and the riders to talk us through this. Mark, is there a short list? Who are we looking at here?
There is a short list. Let me simplify it for you. If Tim Cook steps down in the very near future, if something happens, he decides to leave earlier than anticipated, his replacement is none other than Jeff Williams, the company's chief operating officer. He's essentially Tim Cook's Tim Cook. He runs the global supply chain. He runs AppleCare. He runs the design team for both industrial design for hardware, user interface design for software. He's essentially the number 2 at Apple as Tim Cook was to Steve Jobs. And so he would be the short-term successor. The long-term successor is John Ternus. He's the man you see in the middle. He's the senior VP of hardware engineering. He runs the group responsible for creating new iPhones, iPads, Apple Watches, Mac computers, you name it. He's increasingly taken on bigger roles inside of the company. He's worked his way up the ladder quite quickly. He's known as likable and affable with similar managerial characteristics to Tim Cook internally. He has some naysayers who believe he's not an innovator. Certainly Tim Cook has the same naysayers. And he is someone who many people connected to the company, within the company, believe could be the new CEO if Tim Cook sticks around for 5 years or so. Craig Federighi, who you're also showing on screen, he's not a contender for CEO. He won't be one of the options there. Many people at the company don't believe he has the business acumen, and he's pretty much uniquely suited to his role in charge of software engineering, and he'll stay in that role probably for another 7 years or so, if I were to guess.
So, Mark, I mean, it seems like analysts are debating about this potential succession plan from Apple. I mean, how close are we to some change at the helm here right now? Because Tim Cook, he's 63 years old. He's one of the oldest, I guess, CEOs in Silicon Valley now.
Yeah, I think we're quite a ways away. A lot of people connected to Apple believe that he'll be running the company for the next 3 to 5 years. I wouldn't be surprised if he's CEO of Apple until he's about 70. And if he does stick around for 3 to 7 more years, you're going to see a situation where they have very few long-term successors in place other than John Ternus. Jeff Williams will have aged out of potentially being CEO. Eddie Q, Phil Schiller, all these guys who've been at the helm at Apple for 3 decades will have all aged out, because Apple wants to appoint someone who can be in the CEO role for 10, 15 years, just as Tim Cook has been, just as Steve Jobs was before him. Stability at a company means your CEO and your management team is in charge for a decade plus. You have people there who have been there for generations, and a passing of the torch to Ternus would resemble something like that. So I think we are a little bit away from any succession happening at Apple, but it's certainly approaching. Tim Cook turns 65 next year. The entire management team under Cook has been together for decades. It's the same cast of characters over and over again. That's a very good thing until you're all at the same point in your career and you're all leaving around the same time. And that's what you're going to see Apple hitting in the next few years or so. You'll see the CFO leave at some point. You'll see the head of retail leave at some point. You'll see a new general counsel. So there's going to be some changing in the guard at Apple over the next several years, Tim Cook being the most important person there.
Mark, which is why we need someone like you to really tell us what's important and make sure we know the nuance here. Mark Gurman, fantastic stuff. Just read about that, of course, on the succession question and today's big take on the terminal here on my right, of course, on the website or Business Week also, if you fancy there. Okay, plenty more ahead. We'll leave you with a look at markets too. We're up here in Hong Kong 0.3%. We're now 0.4%, 18.4 on the benchmark. This is the China Show. Welcome back. You're watching the China Show. Some trade numbers to tell you about. Well, we're previewing them, and at some point over the next couple of hours, these come out. Of course, 2 sets. Keep in mind, dollar and renminbi figures. These are the dollar figures, I believe, on your screens. Forecast for the dollar figures. There we go. 1.3%. Exports up 4.7%. And as you can see, that's an improvement from the year-on-year figures that we had. Of course, the previous set release, we're looking at, all things equal, 81 billion. Now, the context here is certainly, well, on the economic front, resilient demand overseas. That's the sort of economic narrative. On the geopolitical front, are you going to get a lot more pushback if, in case we do see some of these sort of looking outside China conversations, EVs, what have you, the overcapacity argument that's taking place, is that going to show up in these numbers and going to give, I guess, maybe something for the hawks to talk about? All that being said, if someone's buying it, right? 0.8% MSCI China. Now, keep in mind, though, guys, do we have the I believe we have this too. Do we have the PMI chart that shows new export orders? If we have that, let's show that, please, even if it's not right now. But the backdrop here is we have seen a pickup in new export orders, right? So there has been some data that has told us early on that new export orders and these things are actually starting to pick up. So March and April actually saw a spike in new export orders PMI. There we go, on your screens coming up. That should be the blue lines on your screens. Can we get that up, please? Thank you so much. There we go. Early indicators of exports coming up. Right, back to the here and now. Properties very much in focus. Hangzhou, the latest one of China's big cities to ease some of these home purchase restrictions. So Hangzhou is scrapping home purchase curbs is the headline coming through. This follows other big cities in recent weeks. So we had, I believe, Shanghai. Just this week, I believe we were talking about this, if not late last week, we were talking about Shenzhen coming through. We're getting a rally coming through as far as this is concerned. So watch this very, very closely. Very quickly, the broader read across these markets. And because of what's happening here and some other pockets of the market, we're now up on equity markets in Greater China, 1%. On MSCI China, 60.80 right now on that specific index. Coming up, well, plenty more ahead, suffice to say. This is Bloomberg.
Outside the range if the BOJ continues to sound like a rate hike is coming. But if you look at treasuries, look at Aussie bonds, European bonds, basically we're not really going anywhere in particular until one of the central banks actually steps up and changes policy. Now, you were mentioning the Bank of England earlier. We could get a surprise from the Bank of England, and they may actually deliver an early cut, which would certainly upend the bond market. More likely it's June, when the European Central Bank and probably the Bank of England will go together around about that time. And that's when we're probably going to see the breakout in bonds. Until then, it's pretty much going to be range trading.
Well, that's the question of the day, isn't it? Can you just talk us through the context here in terms of the Bank of England and who cuts first, Mark?
Quite likely it'll be almost simultaneous. It looks as though when you look around the world of the G10 central banks, nobody seems to want to be the first mover. Nobody wants to go too far ahead of the Fed. But if they are going to go before the Fed, then the Bank of England and the ECB going about the same time would probably make sense, because that would dilute the impact, the damaging impact on their currencies. So quite possible June for the European Central Bank and the Bank of England, the Fed later in the year. Once they start, is a question of whether they go 3 times or 2 times. For the moment, the market is expecting the European Central Bank to do slightly more than the Bank of England. That could be adjusted as time passes. But certainly, if you're a foreign exchange trader, it's a great time, because it really gives you plenty of movement between the euro, between the pound, and all the cross rates which fall in between there. So certainly, probably a more interesting time to be trading cross-rate currencies than actual bonds for now, anyway.
Well, let's throw in equities there, Mark, and just tell me what you think. I want to talk about China with you. The Hong Kong markets are coming up a little bit right now, resuming after 2 days of weakness. We were joined 30 minutes back by Morgan Stanley. So they actually put a note yesterday, Mark, talking about how when you look at momentum indicators, overheated to some extent, which is why quant funds might, I guess, keep away from this market until that comes back in. Actual vol in Chinese markets remains above what you're getting and what you're seeing in developed markets, for example, and that might actually keep the long-only funds away. I guess the question here is, what are the next signposts you think, Mark, we should be watching out for if this rally, of course, in Greater China can continue? What needs to go away? What needs to happen?
Well, next week is huge. We get the start of the big tech companies. We've got Tencent, Alibaba, JD.com, a few others. So it's a very big earnings week. I think people are optimistic going into that. I think they expect some decent numbers from those. Can we look around the world? Most of the big tech companies have had a pretty good start to the year. So I think people in the Hong Kong region are thinking there's going to be something similar there. So they'll probably keep the market on the upside until then. But actually, the big one for everybody is NVIDIA on the 22nd of May. If NVIDIA doesn't deliver, the whole tech world is in trouble, because you're going to be a big retracement off the back of that. But certainly, for the very short term, the earnings from the major Chinese players look as though they're going to be decent. Until that's proven otherwise, I think people will stay slightly bullish. But later in the month, everybody has to take a step back and see what NVIDIA delivers.
May 22, Mark. That's the date. There we go. NVIDIA, the big one. Everyone's watching. Mark Cranfield in Singapore for us. Just ahead here in shows, we'll be speaking exclusively with Chinese driverless, there we go, truck company Inceptio here about their business plans, of course, logistics. They're a key leader, of course, in these key technologies, autonomous driving space. More on that in a moment. We'll also have more from the Capital Markets Forum here in Hong Kong, where, of course, Yvonne is, and we'll be speaking with a Saudi exchange CEO. So lots more ahead here on the China Show. Thanks for joining us, by the way. So more ahead. This is Bloomberg. You're watching the China Show. Some trade numbers should be coming through at any point now. So the dollar figure is a preview. So we're looking at an improvement from the previous month in terms of not so much month-on-month, but the year-on-year figures when those numbers do come out here. Dollar figure estimates on your screens, 1.34.5, give or take, on imports. Just over 80 billion as far as the trade surplus is concerned. And this goes into the next conversation on this factory glut. And the title of today's piece is The Factory Glut in China Alarming the World, but there's actually no quick fix, because the reason I bring that up in the context of trade is when you look at the products that have driven export growth in China, the new three, right? EVs, lithium, and solar. Let's talk more about that story. European leaders are the latest to add to this groundswell of complaints about factory output in China. There are no signs or no easy fixes, of course, in place, at least easy options for Beijing at this point. James Mager is with us, our China economy editor, to talk us through this piece. Yeah, James set the stage for us amidst, of course, this trip of the Chinese president. Now, he's in Europe, of course, at the moment.
As you said, she's in Europe right now. I think he's just landed in Hungary. And his meetings with Ursula von der Leyen and Emmanuel Macron were sort of dominated
James?
by this.
James, sorry, let me just step in. I think we're just going to sort something there with some of your audio. We'll try and get you back there. James Mager, of course, in Beijing. We'll see if we can sort that out, of course. In the meantime, let's talk about other stories that we're tracking at this point in time. Why not? Let's start things off with Country Garden. There's a deadline today, and some big news yesterday here. The company, and this is a big test, context here, right? The company said to be seeking help from a state-backed program to pay interest that's actually due today. Now, sources are saying it's in talks with China Bond Insurance Company over two notes with coupon payments. We're talking worth more than $9 million. Now, it's the first major test of a program introduced back in 2022 to help developers facing liquidity crunches. Okay, Nomura has joined JPMorgan in limiting dealings with Asian hedge fund giant Segantii, which is facing charges here in Hong Kong of insider trading. Sources say Nomura won't add more leverage or new positions to its dealings with Segantii, and the fund, its founder, Simon Sadler, and a former dealer say they will vigorously defend themselves against these charges. Now, official Chinese data suggests that Apple's iPhone sales there jumped about 12% in March. It's an early sign of success in efforts to turn around a decline after Apple and its retailers cut their prices. The tech giant last week surprised investors by reporting quarterly revenue from China that actually beat expectations. Right, plenty more ahead here in shows. This is Bloomberg. Welcome back. You're watching the China Show. This conversation around overcapacity, this excess, this factory glut, if you will. Is it because of the slowing economy? When you look at sector-wise, is it because of a lot of investment that's gone through, for example, in recent years? And people seem to forget that China put a lot of money to develop their car industry, EV cars, and certainly when you are right now. What is it a function of? What are the symptoms of it? James Mager is here to actually clarify things for us. Yeah, so James, we're all yours. Take us through the story. Fantastic piece, by the way.
Thank you. I mean, I think on the overcapacity story, there's a bunch of different things that people are talking about. They're just lumping under this one title. I think if you look at solar panels, for example, or if you look at lithium batteries, there is definite overcapacity in China. And Chinese companies are reacting to that. You're seeing solar companies cutting production. They're cutting jobs in China, and they're trying to shift some of that production overseas. So in that sector, at least, the complaints about overcapacity are real. The government came out yesterday with a policy which looks like it's trying to cut future lithium battery capacity. So again, there is a concern domestically even that there is overcapacity. On EVs, for example, which is the really big one that people in Europe and America keep talking about, especially in Europe keep talking about, it's really not a question of overcapacity. It's a question of Chinese car makers are more efficient and they're making better cars cheaper than European car companies can, and the Europeans are afraid of that. But then those are questions about overinvestment, or in the case of cars, just being better at making things. On looking at other sectors, like steel, like excavators, what that is there is overcapacity, and that's going through into exports now. China's exporting a lot more steel than it has been. China's exporting a lot more excavators than it has been. And what's really driving that is domestic economic weakness. The investment, the companies that are making those products can no longer sell them domestically to the housing sector, which has collapsed. Construction has collapsed. And so they're having to turn to exports to sell those, and they're underselling foreign competitors, and they're basically dumping those products overseas because they can't sell them domestically. So there is definite problems about overcapacity. A lot of the discussion about overcapacity is very, very focused on new energy vehicles, on lithium batteries, and on solar. But actually, if you look at the broader economy, there's a lot of other problems. There's a lot of other overcapacity problems that are actually much more serious and are really being driven by Chinese domestic weakness, not by these questions about subsidies or whatever.
James, thank you. James Mager in Beijing for us, our China economy editor. You can catch the piece, by the way, on your Bloomberg and also on the website. Right, let's overcapacity. Speaking of, there's an empty chair right beside me because Yvonne is at the exchange, of course. Yvonne, I'll bring you in on that.
Yeah, we just had that great conversation with Bonnie Chan, the new CEO of the Hong Kong Exchange, anticipating the comeback of these big ticket IPOs as underlying conditions improve and Chinese regulators are giving a helping hand. Bonnie Chan spoke exclusively to us here at the Capital Markets Forum in Hong Kong.
I think what we want to focus on at HKEX is really, first of all, to play to our China strength, really build on it. I think that's our trump card, definitely. And then surrounding it, really three strategic imperatives that we are very focused on. The first one being our efforts to continue building the market vibrancy and to create that network effect. What that entails is really to bring more issuers, more investors, and more products into the ecosystem.
You mentioned about that. What your predecessor, Nicholas Aguzin, talked about this great IPO pipeline that was coming.
Yes.
When do you think this will finally materialize?
Yeah, I think, well, first of all, as you probably know, only a few weeks ago on the 19th of April, the CSRC issued 5 measures which will provide a lot of support to our capital markets, 3 of which are very closely related to the Stock Connect, including a relaxation of the ETF eligibility standards, inclusion of REITs into the Connect franchise, as well as the southbound RMB counter inclusion into the Stock Connect. Also, there is a very exciting one, which is the 5th one, which is to bring high quality, top-notch companies from the mainland to come and list in our market. I think all that is creating a lot of excitement. And I will share with you that actually since the announcement of those 5 measures, we have received so many calls, you wouldn't believe, from potential issuers really wanting to explore doing an IPO in our market. So that's going to add onto the already quite robust pipeline.
Okay.
Now, in terms of when
any IPOs been lined up since those measures come through?
Well, we have the 100 companies or applicants in the pipeline already, and I think with the latest measure, and really that excitement and a lot of proactiveness in terms of reaching out to us, I can really only see that building up. So for us, obviously we need the market conditions to also be a lot more conducive to getting the IPOs done. But I think what we've seen lately, especially the last 2 weeks of April, is giving us a lot of hope.
Yeah. When they mentioned the Beijing that they will support leading industry names, what is your interpretation of that? Are we going to get these blockbuster names coming back here in the city?
So my interpretation, first of all, in terms of sector, what we can do really to complement the domestic exchanges in the mainland is to focus on the new economy. That's what we have done very well since 2018. And as you know, we have issued a new chapter in our listing rules, Chapter 18C, which focused on what we call specialist technology. And these are really the sectors I think investors are most interested in at this juncture, including things like artificial intelligence, new energy, new materials, quantum computing. And so while I really want to sort of see more names coming, and I don't know whether they are only confined to this space, I have a feeling that a lot of them will be in the specialist technology space.
That was the Hong Kong Exchange CEO Bonnie Chan speaking with me earlier, her first TV interview since taking that top job back in March. In just a few minutes, we'll be speaking to the Saudi Exchange CEO Mohammed Al-Rumaih, talking a little bit more about the IPO pipeline in Saudi Arabia as well. He joins us next, Dave.
Yeah, there we go. In the meantime, lots is happening here. So in case you missed it, big news out of Hangzhou, and perhaps reason why you're seeing some of these property counters rising quite substantially, though we're coming off highs a little bit. Let me simplify this for you. Hangzhou has removed all property restrictions effectively. There we go, as far as that's concerned. So yeah, quite a bit of, and really in line with market expectations, really, of more easing here coming out of China. So we're looking at, Hangzhou City removes all restrictions on residential property purchases from today. That's according to the local housing bureau. Very quickly, before we head into the lunch break in Japan, one stock we're tracking as well, Mitsubishi Motors, and quite a big news here. So reported earnings on Wednesday, shares dropped then, and then we're getting an additional piece of news here that a U.S. court has ordered the company to pay $1 billion in damages in relation to a car accident back in 2017. Plenty more ahead. This is Bloomberg. We're just headed into the lunch break over in Tokyo. Quite an eventful morning. I would even say quite an eventful 18 hours or so. First, in the currency markets, rhetoric's been upped a few notches, talking about at least intervention, at least verbal intervention, and really talking about the possibility that they're ready at any time. To make matters more complicated, in between those comments coming out of the BOJ and also the Ministry of Finance, I believe, just BOJ, I think minutes of the meeting coming through, and me putting June as live right now, how dramatically inconvenient. Effectively, you're getting a hawkish tone across assets in Japan. That said, of course, hawkish meaning has been good so far for equity markets. Dollar yen's trading at about just under 155.60. It's really in the bond markets you're starting to feel that come through. Your 2-year yields at 30, your 10-year yields at 92. Very near 2009 highs on the 2-year yield. On the short end, the 10-year yield is very close to the peak of last year. You're also getting a spread compression between you are in sort of cash market yields and where you are in swaps in Japan, which I guess in some ways tells you how the markets have coalesced on pricing on fairly hawkish tone coming through there out of Japan. So that's story number one. Story number two is when you look across Asia Pacific, it's because of Japan and also because of Hong Kong, you're getting some green on the benchmark today, 0.2% to be more specific. The dollar is slightly on stronger footing against most, not all. I'd be remiss of my duty if I didn't mention all the rate decisions coming through. And you have one in Malaysia a couple of hours before the big one coming out of the Bank of England. And in fact, the question of the day we have right now, just to mention that for viewers, is who cuts first, the Bank of England or the ECB? Is it simply a scheduling matter more than an actual race. More on that in a moment. Very quickly, Hong Kong benchmarks going into Hong Kong and Chinese benchmarks. There we go. About an hour into the session, we're doing better than the open, although coming off highs from about, I'd say, 30 minutes back. Hong Kong property, of course, is very much in focus. We talked about that in Hong Kong Exchange, just bottom of your screens, of course, on that very note. Right. Okay, let's take you through some of the other stories that we're tracking at this point in time. Shares of Shopify tumbled after the Canadian e-commerce company pledged to continue investing in marketing despite the pinch in its profits. Wow, 18.5%. There we go. Now, the firm sees gross margins in the current period narrowing, a forecast which overshadowed its strong first quarter performance. Now, the U.S. traded shares, as you can see on your screens, just to put that into context, is the biggest intraday decline ever, reflecting concerns about future profit margins. Right, Airbnb is providing lackluster guidance for a second consecutive quarter here, suggesting growth in travel spending will slow further before the peak in the summer season. These kicks in. Revenue for the current quarter between $2.6 to $2.7 billion. Airbnb is blaming the earlier timing of the 2024 Easter holiday as well as some currency headwinds. Right, corporate stories, we'll set that aside for now and we'll take it straight back to the Hong Kong exchanges. And Yvonne is there standing by with her next guest. Yvonne.
FDI that took place.
Yeah, joining us exclusively now is Mohammed Al-Rumaih. He's the CEO of the Saudi Exchange and really part of this big capital markets forum event as well. Mohammed, it's great to have you here in Hong Kong. Let's talk a bit more about the Saudi market. It is going from strength to strength. We've seen 6 IPOs so far this year. We've just heard that 4 have announced offerings for the rest of the year, including one could be one of the biggest, the hospital group, Dr. Solomon Abdul Qadir Faqih Hospital. I mean, that puts us to 10 already. What are you expecting for the rest of the year?
Thank you, Yvonne. Yes, we have been enjoying a very healthy IPO pipeline. You're right, since the beginning of this year, we've done 6, and currently there are 4 that are doing concurrently. And we have more than 10 IPOs approved, but waiting for the book building and dealing with the brokers and asset managers to determine their listing and offering date. And we have more than 50 applicants with us at the exchange and with the regulator. And the good thing about those IPOs is not just the number, but the diversity. So they are from different sectors and different sizes and different stages in their life cycle. So we believe we will be having more IPOs, given the liquidity that we are enjoying. It's 100% up compared to the previous quarter. The interest that we are getting from international investors, the secondary market performance for the newly listing companies, all those factors encourage more companies to list in our very active exchange.
You mentioned liquidity. You think there is enough liquidity in this market to absorb this flurry of IPOs that you're seeing?
Absolutely.
Okay.
So we've up 100% since I think the same period last year. And last year we did more than 35 IPOs. If you factor this and also the growth from international investors, that means the environment is great for new listings and new IPOs and encourage more companies. And actually, we are seeing an increase in appetite from the international investors for new companies, new stories coming to our market. We have seen many international companies, and actually we have had great meetings with the great names from here who are considering to do cross-listing in Saudi.
Yeah, and which brings us to this event here. Hong Kong and Saudi exchanges you guys did sign a pact last February to try to at least work together in cross-listings. What sort of progress has been made so far?
So the cooperation between us and Hong Kong Exchange goes beyond the cross-listings. We exchange information related to the ESG, derivatives market. Hong Kong has been very successful in many of the things that we're trying to do. For example, the derivatives market and the debt market as well. They've been successful in attracting international investment, although that we're doing very well. But we will always look to get the experience experience of one of the best, I would say, international financial center like Hong Kong. And this is our first event outside of Saudi Capital Forum. This is the first one. And we are giving an opportunity to our great Saudi companies to meet with the investors from China and from Hong Kong. And I think the prospects are great. We believe this will generate more opportunities for them, and at the same time will give, I would say, a great support to our companies to pursue their growth plans.
Yes, Bonnie Chan from the Hong Kong Exchange said it's like matchmaking today. Is there still plans then to have a Saudi company cross-list on the Hong Kong Exchange? And if so, I mean, what sort of sectors, companies have you been talking to?
When it comes to building a channel between two exchanges, it's always about technicality and regulations. And this is something that we are currently working on. But the decision whether a company wants to cross-list from Saudi to Hong Kong or vice versa is totally the desire and decision of the issuers. So it's 100% on them if they believe there is an opportunity or benefit from them, whether it's a Saudi company going there or a company from Hong Kong wants to go to Saudi. It's 100% the decision of the issuer. But we want to have the path ready for them in case they decide to do so.
I have to ask you about Saudi Aramco and the potential for this second listing. Is there a chance that Aramco could actually have a cross-listing in Hong Kong? Have there been conversations? I know the chief executive of Hong Kong, John Lee, has been to Saudi many times trying to bring this second listing here to this city. Anything that you can tell us about any updates on that?
Well, I'll give you the same answer. When we work with Hong Kong Exchange or any other exchange, we're providing the pathway for companies to go from either side. It's totally the decision of an issuer. So look, what is the best opportunity for them? If they believe the cross-listing will serve their goals, then their decision. I cannot comment on a specific issuer or issuances, but I believe the Saudi capital market at the stage, at the liquidity level we're having, I think many companies will think twice before going to other markets. But we believe the issuers that are sophisticated enough to decide what's the best for them without commenting on a specific issue.
Okay. In terms of foreign ownership, I know part of this event is really for Saudi businesses to try to gain more exposure to Asian investors. What is Saudi Arabia doing to improve foreign ownership in its own market now?
Many things. I mean, if you look at the Saudi capital market, the foreign investment grew, I think, by 200% if you compare to 2019. Every year we grow more than 20% in terms of the international inflow. And if you think about it, Yvonne, we're still a restricted market. That means that not any foreign investor can invest in Saudi. They need to go through the qualified foreign program, which is something that you are familiar with. And yet we are enjoying a lot of inflows from international investors because of many reasons. One, we have a very advanced capital market at par with the international markets around the world when it comes to the corporate governance code, when it comes to the minority interest, and actually it's one of the best. And the very active IPO pipeline. But most importantly, if you look at Saudi as a story, I mean, you have everything you want. Youth nation, 60% below the age of 30. Rich in resources, natural resources, minerals. We're opening up. It's great to do business over there. We have reached many of the what they called impossible targets when we've announced the Vision 2030, and actually halfway to that toward the end of the journey. But we have achieved many goals that were set, and we didn't set relaxed. We have revised and make it more challenging for us. Low inflation, one of the fastest growing economies among the G20. So what else do you want to ask for?
Well, what about this competition between, other Middle East nations like Dubai and Saudi Arabia to be the top financial hub? Do you have any plans to maybe even broaden your scope a little bit to start commodities trading in Saudi Arabia, or even trading Saudi oil, for example? Are there plans for that?
Well, as a Saudi Tower Group, I think we recently announced our intention to acquire 20% of DME. It's a commodity platform. If you want to talk about the competition between us and the other GCC markets, we work closely together. We compete, of course, but we look at the GCC as a good destination, as a very attractive region to get the international investments. And I think it is one of the best destinations for any international investor at the moment. As of today, we represent more than 80% of the market cap within the GCC and more than 80% of the liquidity trading in GCC. We've done a cross-listing between us and Abu Dhabi, and many companies are looking to do dual listing between GCC exchange and us to get benefit of the exposure and the depth we're having. So I think it's healthy for the GCC countries. For us, we're going full steam ahead. We are not slowing down, and we'll be one of the top exchanges globally.
Mohammed, it's great to have you here in Hong Kong. Mohammed Al-Rumaih there, Saudi Exchange CEO, joining us here at the Hong Kong Exchange. Dave.
Yep, and of course, coming up there with Yvonne there on the ground, we'll also be speaking exclusively with CSOP Asset. The CEO, Ding Chen, joins us to talk us through, of course, the Saudi ETF that they launched, and of course, investment opportunities as well, as far as from their specific perspective is concerned. But ahead of that, well, we're talking autonomous trucks. There we go. So first, there was Optimus Prime, and then there was Inceptio. There we go. Julian Ma joins us in a couple of minutes. Stay tuned for that. This is Bloomberg. You're watching the China Show. We're looking at some of these car makers. Mixed picture. Some data came through yesterday as far as the PCA is concerned on sector data. So month on month, 6% if you sort of dig through the numbers. Speaking of, let's talk about, well, not just cars, trucks, really. Driverless vehicles, generally speaking, is a market sector where automakers and tech firms are effectively going head-to-head. Now, our next guest, the company specializes in autonomous driving technology, specifically catering for the logistics industry. It's backed by CATL and PE firms such as PAG. Joining us out of Shanghai is Julian Ma, founder and CEO at Inceptio Technology, exclusively, I should also note. Julian, good morning. Thank you for coming on the show. I want to talk about your business strategy and expansion plans in a moment, but maybe just for a global audience, tell us about your technology. What makes you guys cool?
Our company is Inceptio Technology. We focus on developing the autonomous driving system for the trucks, in particular for the heavy-duty trucks. We took a step-by-step approach for developing the technology and serving our customers. Currently, we focus on making the technology commercially available and commercially viable. So our first generation of technology are at the level 3 and level 2 plus. With these products, our customer can immediately use on the public roads and can immediately have the commercial value. For example, for all of those long journey, which is typically between 1,000 to 1,500 kilometers per trip, our system can take up to 90 to 99% of the whole driving works. So that leave only between 1 to 10% of the driving work to the driver. This is a very significant reduction of the workload, and it is much safer, and it is also much more fuel efficient. So with that, we have made some initial success in China market. Just by the end of April, the commercial mileage of all of the Inceptio powered heavy-duty truck has exceeded 100 million kilometers. So this is by far the largest commercial deployment for autonomous truck system worldwide.
Yeah, the milestone 100 million kilometers accident-free, I should also mention that. So you mentioned level 2 plus and level 3. Talk to us about level 4. What exactly is level 4, and when are you guys rolling that out?
Level 4
is that gets? Yeah, go ahead.
level 4 is fully driverless. And the level 2 plus and level 3 is highly automated, and it can reduce majority of the workload for the truck drivers. So we can say that level 4 is driverless, whereas level 2 plus and level 3 is in the mode of co-pilot. But in that co-pilot mode, the driver is no longer doing all of the tedious driving, which is very exhaustive, and the role has been changed to a sort of a safety driver or sort of a truck monitor. So the workload is, the mode of working is fundamentally different, and that actually creates much higher safety, a totally different level of comfort, and a much higher level of the fuel efficiency. And that all translates to immediate commercial value to the fleet owners. So on average, our fleet owner can make a saving of between 5 to 10%, in between 5 to 7% on a per mile basis of the cost.
Right, and I can definitely see the economic and commercial benefits of, I mean, even level 4, for example. Can you talk us through level 4? What is the regulatory environment in China for level 4 driving? In other words, is that allowed? It's the first part of the question. And as you expand overseas, what hurdles do you expect to encounter from a regulatory standpoint as you try and roll out this automated driverless technology in other markets?
So today, actually, not only in China, but we see that throughout the world, for level 4, which is truly driverless, that is still probably quite a few years to go. And throughout the world, including China and the US and Europe, there's only a very limited area where a test license has been issued for the driverless operators. And that is actually far, far away from a massive commercial deployment. So we see that is happening at least 5 years down the road. So we see that the more sort of foreseeable future is that the first step is a massive deployment for level 2 plus and level 3, which has, for example, for level 3, there's no legal hurdle now worldwide. For level 3, we see that that legal hurdle is probably can be solved in a couple of years, and then it goes to level 4. So we see that actually there's a fundamental shift of the interest on the industry side and also on the logistics customer side, because they see that first of all, the level 2 plus and level 3, which is on a co-pilot mode, are creating significant value to the customers. So, for example, taking in China, our technology has been used actually across all segments in the line haul logistics. Large express companies, for example, SF Express and JD Logistics, basically they are China's Amazon and China's UPS. They are using our technology very happily, and they are creating saving every day and much safer, and even has a very good emission reduction track record. And for a broad-based 3PL logistic companies, and even for the individual owner operators, they are very happy in using our technologies because, first of all, it creates saving, and secondly, it makes the driver happier and solving the universal and worldwide challenge of hiring drivers and making the drivers happy and comfortable. And thirdly, for the Fortune 500 companies and leading companies, there is an increasing concern for the ESG, which is about working environment and working conditions and environmental protection. And that kind of value has been clearly created by currently level 2 plus and level 3 technologies. So we see actually a very strong shift of the interest from customer sides, from the automotive industry sides, to first focusing on creating a real products at the current level 2 plus and level 3 level, and then gradually move to level 4. For example, in China with us, we already have 4 truck OEMs are being as our truck partners, and together we already provided a total of 7 models to the market, and we are receiving a strong interest from outside
Julian?
of China, and that actually first from the users.
Julian, that's all we have time for. Unfortunately, we'd love to talk again, please. We haven't even gotten to capital raising and some of your business priorities moving forward. We'd love to have you back, of course. Julian Ma in our Shanghai studios for us. He's the founder and CEO at Inceptio Technology. Plenty more ahead. This is Bloomberg. More news out of Japan, more commentary. They're talking about the currency again. This time it's the Bank of Japan governor, Mr. Ueda, talking about how the impact of FX moves are negative. There we go. Abrupt moves into currency markets are negative for the Japanese economy. That's a material change in tone. The policy response could be needed if FX affects the price trend, or if what happens in the currency markets affects inflation, just to rephrase that very closely. Not a lot of reaction, though, in the currency markets as we speak, although yields are, as you can see, pushing higher. More on the story out of China today. More cities are coming out with measures to boost the property market, and Hangzhou was the latest major city in China to remove those curbs. So all measures on home price restrictions in Hangzhou effective today have been removed. Property counters, bottom of your screens, up 1.4%. A list of cities that have taken a similar route. That's it from us here in the China Show. This is Bloomberg.